Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into our YouTube channel for our weekly video analysis. If you like this video, please give us a thumbs up and consider subscribing. So today we're going to look at some recent rotations that we're seeing into some of the hard asset type ETFs and stocks. And these are associated with industrials, metals, and steel. And we're going to look at some ETFs and some stocks associated with these groups. So I'm here on Stock Charts ACP, and I am just using a basic chart with the 50-day moving average, 200-day moving average, the trend composite indicator, which is signaling an uptrend when it's green, as it has been for several months, and the momentum composite, and I look for oversold conditions when that turns red and moves to -3 or 4. And you can find out more about these indicators by clicking that plugin icon at the bottom right, and that'll show you all the plugins available on Stock Charts ACP. So first of all, I'm starting off with SPY here. And this one has been the leader. It's just in a clear and present uptrend here. Touched the 50-day barely and then bounced to a new high. But what I'm noticing is we've seen this rotation in the market, but it still favors large caps over small caps. And the way I can see that is if you look at RSP, which is the S&P 500 equal weight ETF, it is breaking out and hitting a new high. So this basically represents the average stock in the S&P 500. It kind of neutralizes the technology sector. It's just a mere mortal in the S&P 500 equal weight index, whereas the technology sector is huge in the S&P 500, weighted by market cap. XLK is like 27% of the S&P 500, and then communication services is another 10. So that's 37% right there. But if you take that out, you look at the equal weight S&P 500, it hit a new high there in early May and then stalled out for several months, 2 to 3 months, and broke out to new highs. So the average stock in the S&P 500 is doing just fine. But then when we move down in market cap, we've got MDY here. Well, MDY is still below this April-May high there, and it's got a bullish pattern. I still view this decline here as a correction within a bigger uptrend. You know, you had a massive move there. You hit a new high. You're due for a correction, and you do correct. You held well above the rising 200-day, and it looks like we're breaking out here. But then if you look at IWM, you can see that it is still not the most preferred group out there. It's down today. So it is still not participating, and I would still be avoiding small caps at this stage. And if you can see that trend composite indicator in the first indicator window there, well, it turned negative in mid-July. So technically, the majority of those indicators in the trend composite are signaling bearish. There's 5 indicators, and when 3 are bearish and 2 are bullish, you have a -1. And now we've got 4 bearish and 1 bullish, so we've got a -3 on that. So I'm still staying away from small caps. Now, when we talk about these recent leaders, the first one here is XLI. And you know, it was lagging. You can see here that XLI hit an intraday high there in May, and it had some lower highs, and it had some lower lows. But it's important that you put those into perspective, because pretty much all I do is I look for corrections within uptrends, bullish continuation patterns. So you had this big move up, and then you retraced less than half. I don't need to put Fibonacci's on there to know that's probably about a 38% retracement. That's a pretty shallow retracement. And so you corrected here, and look at that gap down, and then filled it right away, and we're getting a breakout here and a nice 2-day move away from the 50-day moving average. So industrials have started to take the lead again. Remember, they were lagging here, and this is when IGV software and the semiconductors were performing fine, internet ETF, cybersecurity, cloud computing, all these were rising in May, June, and July. But now we're starting to see rotation into things like industrials. And we also saw finance with a big breakout on Friday after yields took that big move higher. Now, a related group would be the infrastructure ETF. And I've got another indicator on here. This is the ATR trailing stop. Again, you can read more about it in the plugins here. But basically what it is you choose it, you pick a starting point, and it is 2 ATR 22 values below the closing high. So you can see as the closing high rises, this trailing stop rises. As the closing high does not rise, it flattens, and then it rises again as prices rise. So what we've got here basically is a bullish continuation pattern because we had a big advance, and then we had a correction in that advance. And so that correction formed a falling flag or a wedge. And if you're looking at infrastructure in June and July, you're saying it's lagging. Well, yeah, when you pull back, you lag. That's normal. But you got to put that lag or that correction, that pullback into perspective. And you had this massive move. This is from like 23 to 37. This is a huge move. So you're entitled to a correction and you get one. And then we get the breakout there. And so the way I trade this is I look for oversold conditions. So here we had oversold conditions. And this one was a little bit early because we moved to a new low. But we had another oversold condition there at that low. So that's a signal. Then you get a breakout. That's a signal. And then you have to manage the trade. And one thing I do to manage that trade is use the ATR trailing stop. And there you can see it right there. It's kind of right in line with the 50-day. Now, sometimes you don't need the trailing stop because there's a clear support or resistance level there. And you can see, let's call it 35. If you go below 35, that's going to negate that breakout. But sometimes you get an advance and you need a trailing stop to lock in those gains so they don't get away from you. But right now, this is a bullish breakout, and I'm putting that first support level there at 35. So I got a few stocks as well that are making moves. This is CSX Corp. It is a railroad. And there you can see hitting a new high. And then we get this breakout. And this is a classic. You get a breakout and you get a little throwback. And you have a pattern within a pattern. Because if you look here, you can see that's a little wedge. And this is the fractal nature of technical analysis. So you have this big advance here and a falling channel wedge and a breakout. And you have a short advance and another wedge and a breakout. So this one looks like it's headed to a new high. And there's the ATR trailing stop for reference. And then the other one is ITW, Illinois Tool Works. And you can see again, there's a correction and we're getting a breakout here. So it looks like it is headed to a new high. And the other one is another old school stock, Ingersoll Rand. I mean, how old school does it get? And you can see correcting, and then a higher low above the 200-day. And look at that breakout there. We got a breakout above a resistance level, and there's the ATR trailing stop for reference. So industrials are looking good now. So what's new at trendinvestorpro.com? Well, here is the main analysis page, and every week I put out a weekend video, and I'm talking about the rotation there. And that's has been a theme basically for 2 weeks because I saw these bullish patterns in banks first, and we've been watching bullish patterns in industrials, steel, XME as well. I also highlighted the online gambling ETF and some stocks. And there we are looking at treasury bond ETFs, gold and the dollar. And then Thursdays, I put out this big ETF trends, patterns, and setups report. And I'm going to go to that report here. And I kind of rank my ETFs. You got the strongest ones at the top. So XLV's at the top. And you can see, it's moving higher there throughout May, June, and July. But I'm going to scroll down because we had a dividing line in this report when we were seeing some things break out. Here are the electronic vehicle ETFs, and we're identifying those breakouts. And there's the ATR trailing stop in red there. And then you can see some other breakouts we were looking at. Housing, ITB, breaking out, as well as infrastructure breaking out. I just showed you that one. So I've been watching that one. Copper breaking out. Now the copper ETF failed to hold its breakout, but if you look at COPX, which we're going to look at next, it held its breakout, and there's the ATR trailing stop. So check out trendinvestorpro.com if you're looking for bullish continuation patterns within bigger uptrends. Ride the trend, my friend. So here is the Copper Miners ETF, and you can see the trend composite. It's been bullish for quite a while here. I'll open that up, and you can see it turned bullish there in July, and it has been bullish until July. So for a year, got a little bearish whipsaw there, and it's back bullish again. And I'll open this up so the trend lines align again. And you can see this falling wedge, the 200-day, and a wedge breakout, and a little throwback. So it's kind of at that moment of truth. And if it goes below that ATR trailing stop, it's back to the drawing board for COPX. Now, a stock that I was noticing is Freeport-McMoRan. Doesn't get any more metals-y than that. I think they've also got some oil interest unless they spun it off again. And there is a falling channel type pattern there, falling wedge, the 200-day, and a breakout. And then there's the ATR trailing stop for reference. You know, if you see this, you become oversold. So here we are, we're oversold here, but we have a double dip. So sometimes you don't get an immediate bounce when you become oversold. It's important to have a plan in. What's your plan as far as an exit strategy? Are you going to use a profit target? I like to use profit targets with mean reversion trading, or are you going to use some sort of a trailing stop? Now, the next group I want to go over to is steel. This is SLX, the steel ETF, and it also has a breakout. These patterns are pretty much all the same. You hit a new high after a massive move, then you had a correction, and you're breaking out. And there you can see there's the ATR trailing stop for reference. So if you go back below the 50-day, you would question that breakout and be back to the drawing board for that one. But there's a lot of strength within steel. If you look at Nucor, you can see that Nucor had a pullback, and look at that breakout. And you could draw a nice trend line there to get a breakout signal, or you could use Stochastic RSI for a pop. But there's the momentum composite hitting -3 a little bit early, but that's your heads up to look for the pattern and look for the trigger and look at that move higher. And another one that's making a move is Steel Dynamics, STLD. And there you can see a similar setup, a pullback and a breakout. So the bottom line is we're seeing some rotation signs because money is moving into financials, regional banks, materials, steel, industrials, infrastructure, and those are the groups that seem to be taking the lead right now. So if you'd like to know more about trendinvestorpro.com, you can click on the link in the description below. If you like this video, please give us a thumbs up and consider subscribing. Thanks again for tuning in, and I'll talk to you again next week. Have a great day.